The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, welcome to the real world, folks. We've got these terrorist attacks again in London. It's hard to believe that Sarah and I went past the one at Westminster Bridge, right by Westminster Chapel, where Isaac Newton is buried. Also, Winston Churchill, and it's really amazing to see it all, corded off for a crime scene. It was amazing. And then we went to Copenhagen, and then coming back, we were in London again, right near the London Bridge. We had dinner within about a half a mile of where all that stuff happened just the other day. So it's a little bit scary when you realize you're in an environment that you're very close to home sometimes. So hopefully this will all work out, and we'll get rid of these bad dudes, and we'll see what's going on. Speaking of the real world, my son-in-law, Sarah's son, is in charge of Parkinson's research here at the University of Pennsylvania Medical Center, and he is really way up the food chain. He doesn't talk about it very much, but his colleagues certainly do. And he has a laboratory and for Parkinson's, and they have 500 white mice that they use. And, of course, he took his son in there to show him the white mice, and he told him what he did. Avery said, you make the mice sick so that they can get better? And he said, yes. He said, that doesn't sound very fair to the mice. And I think that's a pretty good description of how a 6-year-old looks at the world. But anyway, it's really amazing the stuff that they do. They actually they breed their own mice, and they're kept in 5 to a cage, and it costs them 98 cents a day to feed the mice. It's really a tremendous production, and that's how they get some of these breakthrough drugs. Let's talk about the markets. You're not interested in that. We put up the DAX so you can see what's happening. We had some really nice swings. This is really a great trading market for those of you that stay up in the middle of the night here in the United States when they're trading over in Germany at the DAX. It's really a really good vehicle for trading. It's a $22,500 contract, and it's traded in euros. But they do have a mini, which is 1/10 of that, much like we have in our market here. But it is a very good trading market. You can see by the swings that are there, it goes to the patterns and Fibonacci ratios, and that's the main thing. Now I'm going to answer a few questions that I had over the weekend. There's been something on the Internet about this signal known as the Hindenburg omen. And I'm going to put it up here to let you guys read what it is. It's named after the Hindenburg that was crashed in, I think it was May 5th, 1937. And basically means it's a way of looking at the stocks that are not making new highs. In other words, the ratio of the number of daily new 52-week highs and lows, it's a very sign when both are greater than 2.8%. The index itself is trading higher than it was 50 trading days ago. Well, the problem is there's only 3 examples of this that you can use. There was 1929 it worked, 1987 it worked, but in 2010 it didn't work. So you don't have a very big sample size with this. But what I'd like to do is to show you what it's trying to tell you. That's basically what I'd like to, give you an idea of what it really looks like. So give me 1 second here so I can get it up, and we will take a look at it here. We'll just look at this. This is a 4-hour chart of the NASDAQ as it relates to the New York Stock Exchange Index. As you can see, the NASDAQ has been going up since November. It's only had 1, 2, 3, 4, 5 very, very minor corrections. As you can see, as they're marked in the red box there, they're almost equal corrections. But you'll notice that the New York Stock Exchange Index has been in a really tight consolidation between February and June, and we just came out of that making an ABCD pattern on Friday. this is very similar to what happened in 2000. The Dow topped in January of that year, but the NASDAQ did not top until March 24th. So we're seeing that same type of a situation that is going on then as we have now. Now, the other question that someone asked is there was a big thing on the Internet. I don't know if it's a big thing, but two people emailed me about it, and that is the fact that there's this wedge pattern that is going on in the rising wedge pattern that's going on in the NASDAQ composite. And so what I'm going to do is to let you take a look at it because, I'm just getting this information to give an idea of what people are talking about and what they're looking at. You can see this is the rising wedge pattern that you have here, very similar to the one that we had in 2000. And as you remember, Isaac Newton, back in the 1690s, he had this thing about what goes up must come down, and sort of the laws of gravity equals rallies. What was it? I can't even remember all of them. But anyway, let's get equal moves beget equal moves. Yeah, it looks like a building crane. You're absolutely correct. But let's take a look at, if you take a look at this rising wedge and break it down into patterns, and this is all I'm doing is going from a 4-hour chart to a 6-hour 4-hour chart to an hourly chart to let you see what it looks like. We're going to bring it up here, and you'll notice that the parallel lines that you've had here since March have been, pretty much equal. This is Newton's second law of motion. For every action, there's an equal but opposite reaction. And you'll notice the big red line going back to January. That's the ABCD pattern. That was only a 32% correction that we had in March, and we hit that number Friday. That was the ABCD pattern if Newton was correct, and there should be some type of correction possibly coming in the market very, very shortly. Now, that doesn't mean there's going to be, but it does show that there's some of these patterns, are lining up pretty good. If we watch the New York Stock Exchange Index and show you what it's doing, this is really, the biggest of them all. We'll put it up so you can see it's so different than the NASDAQ. It's hard to believe, but yeah, go Newton. Anyway, you'll notice since the April 15th low, we had an ABCD pattern that finished at the 1.27 on Friday. That was at that 11,733 level. So that completed that pattern also. So this is that same picture. Now, whether this is a double top or not, you can't really say because you have to have some type of a reversal to the downside. And, that's going to be a pretty big stretch because everybody is talking about bulls will. Everybody should scoff at the Hindenburg because the problem is that it only has 3 samples. But the good part is that it's showing you that the market is actually not nearly as strong as the composite for the NASDAQ is showing you because many of the stocks are just not anticipating. Just look at the oil stocks and stuff. The natural gas stocks. All that stuff is going down. Let's take another one. This was the leader of the pack. This is the one that took us to the first big moves above 20,000 in the Dow, and that was the U.S. We'll be right back. We'll talk about the banking index when we get back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and on a happy note, I'd like to wish my good friend Jim Twentyman today, his birthday. And Jim, you're the greatest. Anyway, we'll get on with these things. I put up this chart of the banking index. As you can see, this pretty much looks exactly like the chart of Goldman Sachs, trading around 213 a share right now. Down from the 250 plus that we had right after the State of the Union that we had back on February 28th, and it's sold off, a great deal. It's just these big NASDAQ stocks, the Google and Apple and all these others are the ones pushing it up. Other stocks are going up too, but we've noticed that the rate of change of this 52 of the new highs to new lows has really turned down, saying that there is actually weakness in the markets in some sections. So you want to keep under that. I believe Goldman Sachs trading around 213 right now, somewhere in that area. I don't follow the stock that closely, but I know that the banking index mimics pretty much what Goldman Sachs is doing, because it's being the biggest stock in the Dow. It certainly affects the banking index quite a bit. Now, let's take a quick look at some other things that are really happening. I'm going to, at the next break, I really want to talk about this dollar index, because we are at the proverbial moment of truth in the dollar index. That's the main thing that we're looking at. So that's rather important. I want to spend a little bit more time when we come back from the break to give you a better idea of what we're really looking at with some of these things in the dollar index. Now, we want to talk a little bit about the gold and the silver, because there's a really interesting pattern here in the silver that looks very, very interesting. The fact that just 1 second, I want to bring this up to you, because the silver has not, 1 second here, I got to move this around just a tad. I think this will do it. Give me 1 second here. Oh, what do I got to do here? Maybe this will do it. There we go. Hold on. Get this silver up so we can take a look at it. You'll notice that gold has been trying to approach the old 1,300 level. We got up to 1286 and change. We could not even make the 61% retracement yet in silver that came in around 1760. Even when gold was rallying strongly this morning, you could barely get silver above the highs of yesterday. That's not really bullish action. I would think that maybe it's early, but you would think that it would power ahead. And if you take a look at what platinum is doing, it's even lagging much worse than we have, in the silver. So there's not a confirmation here in the metals, is what I'm trying to say. And if we take a look at it, just look at this platinum, you'll see that it is really lagging badly, and it's making this 1-3-5 pattern that works pretty well from the short side because you're trading with the trend, as you can see, and 1, 3, and 5 are certainly, heading down, so that hasn't broken out. Now, this could all change, and if we can get the gold above the 1295 level, then I would say then, it's probably going, to get moving to the upside. So we'll see if it's going to make a move or not. Now, in some of the commodities, you want to pay attention. We had this big move in Minneapolis wheat where it gapped above some old trend lines. Didn't take off from that level too much, but we're in an area now seasonally where you come up. This is an area between June and July. I'll get to the bonds in just a second, but in June and July, there's a strong seasonality for corn, wheat, and beans to rally. So keep an eye on that. There's a lot of negative fundamentals out there on Treasury bonds because of the switching of corn to beans because of the wet weather. That could wear off. The slightest bit of hot weather makes that ground dry up very quick. So it's always related. We've never gone, in all my years of trading, we've never gone through a year where we don't have at least one or two crop scares. And with all the other things that are happening in the world, we'll probably have some really wild swings here of what's going on. So we'll watch it pretty closely to let you know if we get it. But if you see a big move up in beans, that's the one you want to follow because it's got a real chance if it gets out of here. But so far, that has not happened. We had major support down here in soybean oil and soybean meal. As those of you that get the 24/7 newsletter, and I cover that in the commodity section, and it's held up, relatively well to, keep watching of what some of these things are doing. But those are the main ones. Well, let's get to the Treasury bonds. This is very important here in Treasury bonds. This is what we're looking at right here. We had this big move in bonds. If you'll notice, if you want to see that rising wedge pattern, folks, take a look at this Treasury bond chart. The one looks like the NASDAQ composite back in March of 2016. That's a rising wedge because you have highs and lows that match up, and that you can see the wedge very clearly here, and it ends up right at this 177 level. Now, I don't trade a rising wedge pattern because I'm looking at the whole pattern on the way up, and I can see either butterflies or three drives to a top pattern where I can take the ratios and add them together to tell me whether I think this is where, the top is going to be. But that's neither here nor there, but it's still a rising wedge pattern. Gartley covered it in his book. But look at the bonds where we are now. Since we bottomed in March of 2017 at the 61% retracement, we've had a 382 rally now, and we've come up to match those highs again up at this 155 and change level. If that's all we get from here, and this is a weekly chart, so we've been rallying for several months, and all we've been able to do is make a 382 retracement, folks, this could really be bearish because if bonds turn down from here, this means rates are getting ready to really skyrocket to the upside. I am not sure that's going to happen, but it certainly is going to be interesting. And this will also affect higher rates in the dollar. That would really affect the foreign exchange markets, and that's what we're going to cover when we get back from the break. Is we really want to look at this U.S. dollar index and the euro where we are, because if you like pattern recognition and you like price and time and symmetry, boy, it's all coming together right now. It's got a lot of things happening to it, but we want to cover that when we get back from the break. By the way, we will have Norm Winsky on next Thursday as our guest, and then next Friday we're going to have our good friend Rich Anderson on the program, and we'll be talking about the grains and especially the meat markets because they've had such, big moves in the meat. Now, before we get to the break, I want to bring out the Treasury bonds here. on the September contract, just to show you what it looks like on a different, because when we switch over from June to September, these are a little bit different contracts, and you'll notice that we get very, very close to that 155 level, and so that's the 382 on the long-term basis. So keep an eye on any really strong weakness in the bonds from here is telling us we're getting ready to go upside on interest rates, downside in the bonds and notes without any stretch in the imagination. And the last one before the break, of course, here is the Treasury notes, and you'll be able to see this pattern easily. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the daily chart of the U.S. dollar index, and I just want you to take a look at it. It shows that we're down at this 56.58 level, and why this is important. You can see the ABCD patterns that are here, but what we really need to do here is to come in and take a look at this on the long-term weekly basis, going over the last several months. And this is just get this up here a little bit, and if you'll hold with me for 1 second, I have things going off that are beeping like crazy, and it is the composite making a new high, which doesn't surprise me. Give me 1 second here to turn this off, and then we'll be able to turn this off. It's got, that must have been a reason why I had that in at 6304. Keep an eye on that composite today, because that must have hit some type of a major support level, possibly. Let's get back to this U.S. dollar index on the weekly basis, folks. Basically, what you want to see here, and let's get it up here. There we go. I think you can see it easy enough. What you're looking at is the last pretty much 2 years' worth of the U.S. dollar index. And as you can see, back in December, we came down in time from the December period into April. And if you look to the right, you'll see that same triangle that is happening right now. And this is what you mean by symmetry. And you'll notice the patterns in between that symmetry. You can see the three drive to a bottom pattern occurring. And if you look at where we are right now, we are setting right at the 61% retracement of that whole move going back to April the 30th of 2016. We're making a 61% retracement of that. If you notice, after the April low, the market made an ABCD where the CD leg was 1.618 of the AB leg. And the reason why I did that, if you'll notice in between, I didn't draw the second ABCD that you can see between August and November. That was election night, which was a 61% retracement. That ABCD also measured to the 103 level. So this is what we're talking about when we're looking at symmetry with time and price and the Fibonacci ratios coming together with patterns. This is what we're looking at here in the U.S. dollar index. So we need to watch this index very closely because it's related to commodities. It's related, of course, to interest rates and everything else. So we want to watch this one very, very closely. Now, in order to take a look to verify this, we should take a quick look here at the euro. And what we're going to do now is we're just going to go to a daily chart and watch the euro, because we've been watching this here in our show here day after day for quite a while. But if you'll look going back into that 2015, 2016 level, you'll see there's been a very high probability of cycles high coming in 107 days after a low was put in, and that's what we had coming in on Friday, and we got up to that. You'll notice that level of 1279. We hit 1286 last night, and then we backed off about 70 pips. But this is a downtrend. As you can see, those rally highs are all lower. And if the euro is going to turn, it's going to do it from right in this area right here. Now, we did have a 70-point pullback late last night and early this morning, and so far that's all it's been. But keep an eye on this, because this U.S. dollar and this euro are all lined up perfectly for a potential bigger move. And if you like trading with the trend, this is the longer-term trend is down. Of course, the shorter-term trend between December and May is still up. But this is a key area to look at, and you'll notice that the ABCD patterns are all lining up together at the same time, telling you that something big is happening as far as time and price are coming together. So this is one that you really want to keep on your radar, because the euro is the most heavily traded thing in the world by anybody stretching the imagination, and that's really what you're looking at. So keep an eye in on these things, because we have a real interesting thing happening here in the U.S. dollar. In fact, I said in the newsletter this week that this was probably the most important event to watch this week, is the fact that this U.S. dollar has come down and hit the 61% retracement, on the weekly chart, spot on, and that's usually a very strong indicator that there's something big going to happen. Looking at it on a little bit longer time frame, if you'll take a look here, what I've done is I put up the U.S. dollar index as it relates to the S&P 500. That's the green line that you see here, and you notice the divergence. The S&P has been going straight up. The dollar index has been coming straight down for the last several months. We're sitting right at that 61% retracement in 2016. But if you go way back to 2012, you'll remember this light-complected guy over there in Clearwater, Florida, who always has cause. Mr. O'Brien coined the term King Dollar, and that was when it was trading at 73 and it went to 103. So you got to pay attention to Tom when he talks about it. He says that, we're getting ready to break in this dollar, folks. If we get below 96, it could easily go to 80. That's what it looks like. And if that happens, you're going to be seeing some inflation because people will be able to buy our things much cheaper than they can their own things. So we'll watch this very, very closely to see if this is going to be something really important happening or not. Let's take a look at one other currency that is pretty important, and that here is the British pound. I want to give you a heads up on this because we've had a little bit of movement, since the Brexit thing when we dropped from 150 all the way down to 120. We were able to rally back. We haven't even made a 382 retracement yet in the British pound, and it's taken 9 months to do it. We did stop at 382 last week, but any move below 127.50 in the British pound would tell me that we are getting ready to make another leg down in the British pound. And the British pound, it's had some wild swings over the years. So we got as low as 105 back in February of 1985. So these things, when they move, can certainly, go to levels that people are not associated with. In order for the British pound to be bullish, you have to get it above the 132 level. So nothing's really happening now except completing some of these smaller ABCD patterns that you can see here on the charts. And that's the key thing is to watch this 382 level that we made here just last Wednesday when we hit the 127.70 level. And that should be, a very, very important thing, to be watching as we look at this. So we'll see what's happening. I guess that Google just made the $1,000 club, which is good. And we have now Google, Amazon, and, of course, Apple would be trading around 1,500 because it's split 10 for 1. So these are the stocks that are making that composite go crazy. And Priceline, I don't know how you can even include that because it's really hard to get that stock other than if you just buy it. To try to sell it short, which is probably a good thing. It's really difficult to find anybody that, has a supply of the Priceline in order to make it. One thing always when I see Priceline, I wonder how Priceline Charlie came out of this because he was very set stock, and I know he protected himself, so hopefully he did. And Priceline, if you're listening, we love you, buddy. Give us a call. Make sure you're okay. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at the S&P cash. You'll notice that we did make a double top in February and again in May. That's when we had, I don't remember which was the big break from some kind of news. Did it? I don't know, maybe it had been Korea, I'm not sure. And then, of course, we stopped right at the 61% retracement. That happened on May the 18th when we had, I believe, our friend Norm Winsky on saying it was probably going to be some type of an important turning point, and it certainly was. And we did go up and complete the ABCD pattern on Friday at that 240.37 level in the futures, and the cash was just a tad bit higher than that. So that's one of the things. Now, there are a few divergences in the market, but believe me, there are very few. One of the ones that you might want to think about, of course, here is the IWM, which has been relatively weak. We did have a 3 drive to a top pattern between January, February, and April. That was a very symmetrical one, had a nice 1, 2, 3, 4, 5 structure. We came down, stopped right at an ABCD at the 78% level on May 18th, and then we had the big rally on Friday, but it closed below the 78% level. So that's one divergence that you're looking at. Plus, we already talked about the the banking index and how badly it is going to be looking as we watch some of these things. Folks, I happened to listen to the one of the news programs, I believe it was Nightly Business Report, and they had a gentleman on, and he said you should start to look to buy stocks forever. If that is probably the antithesis of what I believe in, because if you go back and look at some of the stocks, like some of the Nifty 50 stocks, like Eastman Kodak, it used to be one of the greatest companies in the world, and they don't even exist anymore. Look at Polaroid. They had, William Land or Edward Land had this fabulous idea for Polaroid cameras that was the greatest thing in the world. They're not there anymore. I mean, it's just so amazing. People don't realize this, but in the 1920s, American Telephone and Telegraph, which was just coming to, fruition, the telephone, went bankrupt twice. And, so you've got to be really careful and watch what you're doing. Some of these companies like Johnson & Johnson and Minnesota 3M, those are great companies. And, but things change. So you watch the charts, and, that's the one that you should really, pay attention to. Because just to give you an example, you remember last week we were talking about ExxonMobil, that it was such a really good level of 80 to hold on. I just want to bring this up to show you what was happening here. You'll notice that they had really strong support at the 80 level. Look what happened in 2 days. We broke through that support, and it's continuing down since that level. So it's just a matter of, you've got to decide what you want to buy, and you have to protect yourself, against your worst enemy, and that's yourself and your opinions. So, opinions, they're usually wrong, and the market's never wrong. So remember that this is why these prices are going. We're seeing a lot of, resistance now in the Exxon at that 81 level. So until it gets above 81, I wouldn't really touch it. And we're at key levels here in the crude oil, natural gas, crude oil, and the gasoline, and also heating oil. But if it breaks below this 46.50 level in July crude, you're going to be looking at, some really big, moves, to the downside. Remember, we were at $30 a barrel in oil not too long ago, about 8 months ago, and it wouldn't take much for it to go back down to that level again. Everyone's trying to beef up this thing about Aramco and Saudi Arabia and Russia, how they're all coming together to, solidify oil prices. Hey, listen, the market makes the oil prices, not Russia and Saudi Arabia. They can cut back production all they want, but if prices keep going lower, it just means demand is going lower. So that's the key level. The one thing about being a technician that is really good is that if prices are going up, there are more buyers. If prices are going down, there's more sellers. That's really what you need to know, and that's the bottom line, at least from my opinion. You don't really have to realize. They're talking about, Aramco is going to have trouble about the getting this IPO for Aramco from, I don't know what the reasons would be. There's a lot of foreign countries on the New York Stock Exchange, but we'll see what's going on. All right, let's take a quick look at something that I think is very important here from a protection standpoint, and that is the VIX index. We'll just take a quick look at it here. We're down at the same level that we were back on May the 8th before we had that big move up where it almost doubled in price, and now we've come down to the same level. Folks, that's nothing more than a big ABCD pattern from the April high to the May low to the May high to the June low. That's an ABCD pattern. If you like ABCD patterns, you buy the VIX, you become a VIX man, you put a stop in at around 97.40, you risk about 30 cents. The last time that happened, the market gave you $7.50. So that's a very good risk-reward ratio, in my opinion. But unfortunately, sometimes they work and sometimes they don't. But this one has the potential to have tremendous moves. We're realizing that volatility did come back for a short period of time. That means that it's not dead, and that's where I think it's going on. Some of the times when markets go up like they have in the NASDAQ, the problem is when they start down, the buyers disappear, and there's vacuums under the market. So you want to be able to pay attention to that. If you remember, Apple, dropped in half several years ago when it got down to $85 a share, and these things do happen. So pay close attention to them because it's not always a one-way carriage here when you're doing these things. They do have problems. So watch it closely, but keep a really close eye on that VIX index because that is a big ABCD pattern that should be important for some time to come. So we'll watch it, very, very closely. But we are having some weakness in some of these other things that have led the market up, like the IBB and then also the banking index. Both of those have been the leaders and have now turned down, along with the IWM, which is the small cap. So that's also turning down, and that's one of the reasons why they're getting this thing called the Hindenburg-Ullman. And then there's also a sister to that, which is called the Titanic syndrome. But here again, those you just don't see those. You just don't see them very much. So you just don't have enough statistical data to even verify it. But it's telling you that stocks are weakening because you've got more stocks that are going down than going up in certain sectors, and that's the key thing to keep in mind as we're watching these things. So that's mainly the bottom line of what we're looking at here. We're going to try to have Bill Meridian on next week, and all my traveling will be done, which will be good, and I'm looking forward to getting home. We've been gone too long and had a great time. Met some wonderful friends, of course, but it'd be nice to get back to a normal schedule, looking at some of these things that we're watching. Because we got some big moves coming, folks. I really feel it in my bones.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to focus towards the end of the show here about the gold and silver, and I wanted to bring up here the gold and silver index, and you can see that this thing is just really lagging badly. This is telling you that this is not a valid breakout in the gold market. We're also seeing, weakness in silver and platinum, so be very careful being super bullish on gold at this level, because this XAU, it's not a great indicator, but it's showing you that there's a great deal of weakness. And you stop and think of the strength in the stock market, you'd think gold and silver stock would be pulled up just by sympathetic buying, but that's not happening. So we're seeing a great divergence here between the XAU, and if you notice at major tops and bottoms, it lines up very, very nicely. I mean, the correlation here is in the neighborhood of about 90%. And here, over the last 4 or 5 weeks, we've seen gold take off and the other going down. Now, I don't know if that's related to the Japanese and Chinese buying of Bitcoin versus gold. I have no idea about Bitcoin, and I have no interest in knowing about Bitcoin because I got my plate full just trying to figure out what's going on in some of these markets. So be careful here about the breakout here in the gold market, because we're not seeing it in silver, we're not seeing it in platinum, and we're certainly not seeing it in the XAU, and we're certainly not seeing it in the bull bear index in gold also. So it might be a little early, but right now I'd be very careful, watching that as a breakout to the upside. It just doesn't look like it has legs in my opinion. That doesn't mean that it can't happen, in a matter of a few hours changing, but that's not happening at the present time. So watch that. One of the things that's on our radar we really have to watch closely are this bean market, because it's got a chance here, folks, that if it turns, it could really be a big move, because it responds to weather like nothing you've ever seen before. So if we can get July beans above this 938 level, we're trading around 924 right now, that would be a breakout. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.